Welcome to the FT On Air from the Financial Times in London. I'm Martin Sandbu. Joining me is Martin Wolf, Chief Economics Commentator, and we're here to discuss the UK Autumn Statement, which was issued by the new Chancellor, Philip Hammond, on Wednesday. But it was quite an expected, anticipated event because it's the first budget statement after the referendum where Britain voted to leave the EU, creating huge uncertainty, and of course the first of the new Tory government led by Theresa May and Philip Hammond's first as Chancellor. So I want to start, Martin, by just asking your general overview of what the big issue in this statement was and what we learned from it.
I suppose it's fairly straightforward. The Office for Budgetary Responsibility, which is responsible now for making forecasts,
An
independent body established by Mr. Hammond's predecessor, George Osborne, when he was Chancellor, has produced forecasts which are, as one would expect, somewhat more pessimistic about the short to medium-term prospects for the British economy as a result of the Brexit vote, which occurred after the last forecasts, which were last March at the time of the budget, and the vote occurred, of course, in June. So they've now revised their forecasts. They've not been particularly pessimistic at all by the standards of other forecasters. They've made rather modest adjustments, but they're showing the British economy to be weaker. Of course, migration is expected to slow. These are developments which, and that's the second big point, affect revenue and spending prospects. So they're showing, with unchanged policy, a significant worsening of the fiscal deficit position and the amount of borrowing. And the result of that, in and of itself, would be to make it impossible, and this is the third point, to hit the previous Chancellor's objectives of having a fiscal surplus by the end of this decade, by having debt fall in every year without a massive fiscal tightening. And the final point is the government decided not to do that fiscal tightening. In fact, they left things in policy terms pretty well as where they were, with actually a little bit of loosening, a little bit more spending in various ways. It didn't amount to a big thing, and the result is they can't hit their targets. So he's reshaped all the fiscal targets, abolished the ones that were there before, which have given him lots of room to allow much higher debt and much higher deficits into the next decade. That's essentially what happened.
It's quite interesting, isn't it? Because, as you say, it's a modest worsening in the prospect for the economy, although other independent forecasters think it'll be worse.
Indeed.
But it creates quite a big hole in the public finances. And I think compared to previous plans, it go from a surplus at the end of the decade to a deficit that's bigger than the surplus would have been. I think we're talking 20, 30 billion a year worse.
The shift is about 2% of GDP.
2% of GDP,
right.
Which is not small.
It's not small, and
terms.
It means we have deficits forever. And it means, most significantly, taking also the policy changes, that in the early 2020s, the net debt will have risen to about 10 percentage points to over 90% of GDP.
There have been these fascinating charts circulating in the last couple of days looking at sort of 10-year average wage growth and showing that we're in probably the worst decade for about 100 years in the UK in terms of how fast average wages go up or don't go up, as it happens to be in this decade.
Worse than the 30s, which we're thinking about. The real incomes have stagnated for an incredibly long period. And I think that's one of the reasons, perhaps the most important reason, why the Brexit vote went the way it did. With the first thing which Mr. Hammond stressed, rightly, is that Britain's productivity performance, always rather poor. We've been less productive than other major European countries, let alone the US, now for decades. But it was catching up quite well before 2007. But since the crisis, productivity growth has become basically zero, very close to zero. And in a way, that, if it is the consequence of the crisis, and that can be debated, it's incomparably the biggest longer-term consequence of the crisis. We've gone into this position of having essentially almost no growth of productivity. And that means, of course, we're much poorer than we expected, basically, mainly because of this reason, the British economy now is about a fifth smaller, somewhere between a sixth and a fifth smaller than might have been expected before the crisis. And that has shaped all the challenges we have. The OBR, again, is rather optimistic and thinks we will get back to a reasonable productivity growth trend. They keep pushing it out into the future. And if that doesn't happen, we really are in terrible trouble. But that's plausibly at least, it's associated with, and maybe the consequence of the crisis. Then Brexit comes along and adds, actually, against the consequences of stagnant productivity for years and years and years, a relatively small additional shock, which is expected to affect us over the next year or two due to lower investment because of uncertainty, which is still there, and lower immigration because immigration has increased our labor force, increased our revenue because mostly young active workers who increase revenue, and that's also affected the revenue side. So I would say Brexit is an additional shock, but not by far not the biggest shock to an economy already suffering from very severe structural problems in terms of low productivity growth, probably associated with, though it must be a deeper process, but with the financial crisis.
I mean, one tentative numerical comparison we could make maybe is that, as you said, the Brexit forecast at least worsens the public finances by about 2%
Yes.
of GDP. I mean, if we think about how much below the pre-crisis trend the economy is at now, what is it, 15% perhaps? It's a double-digit percentage number, how much we've lost of economic output.
I would guess that
That's
the fiscal consequences of the crisis was probably something like 10% of GDP. So the crisis is the biggest fiscal event.
What's the range of options for Brexit? What do you think is most likely? And how will that actually affect the UK economically, both the budget and the economy as a whole? It's a big question.
This is a huge question.
Let's try to narrow it down to the possible economic impacts, the range of economic impacts.
I am at present think the single most likely outcome, given the immense difficulty of reaching a deal with all the other parties,
simply because there are so many.
Because there are so many. You've got 27 other countries. Right. You've got the Commission, which will be party, and you will have the Parliament. Will be truly a hard Brexit. What do I mean by that? I mean we will be outside the single market. We will be outside the customs union. We will have no free trade agreement with the EU, and we will be trading with them on something which is called World Trade Organization terms, and nobody quite knows what that means. This could be quite chaotic because the change in all the process and procedures will be enormous and the uncertainty will be enormous, and that would have very, very large costs. But because we've only got 2 years to reach this deal, and because of the number of people on the other side, and because most other deals will involve unanimity, not all, that seems to me really quite likely. And at least in the short run, and the short run here will be several years, that will be very, very disruptive.
So just to finish where we started, that sounds like you expect the final economic fallout to be worse than what the Office for Budget Responsibility has
Indeed, the Office for Budgetary
statement.
Responsibility was quite explicit. It thought the uncertainty would sort of end by 2020, and we would sort of know where we are. My view is it's very likely we would not know where we are then, except that we'll be out of the EU, and a wide range of uncertainty would continue thereafter, and therefore I think the OBR is probably being too optimistic, not, as so many people on the other side, on the Brexit side, are suggesting, too pessimistic. I think actually the OBR has made a very sober but moderately optimistic judgment.